Ladies and gentlemen, Christopher Aaron, welcome back. This is our Thursday evening broadcast now. We are coming to you on Thursdays for the time being, for the next several weeks at the very least. And let's have a proper silver price update, shall we? There is a pattern that is forming in silver right now that if you are investing in the sector, you should be aware of. These patterns have a fairly high probability of success. Nothing is perfect or guaranteed ever with anything in life, other than we will die one day and we will be forced to pay taxes along the way, from what I hear. But these patterns are fairly reliable. So let's take a look and let's see how this is shaping up with the rest of the commodity sector as well, the relationship between these two. Really quickly, I just wanted to tell you that I will be speaking in person this weekend at the Vancouver Resource Investment Conference. That's this Sunday at 11:40 a.m. in Vancouver, British Columbia. If you are going to be there, it would be great to meet. Please feel free to stop and say hello. That would be most excellent. Let's dive into silver and let's look at a few things here. What is shaping up for precious metals investors? So, we had the advance from that $15 resistance level. We were looking at that a few weeks ago, and it's really kind of stalled out here in the mid to upper 15s. I believe the peak a couple of weeks ago was 1590, and we've kind of been grinding around in this range. Made a new low for the short-term consolidation here today. But let's take a look and let's put this into perspective and what should silver investors really be expecting with the highest probability assessment. I think this is going to affect you, especially if you're looking to make a significant silver purchase here over the next several months. I think you should do your best to at least align a portion of those purchases with these probabilities, because this is what is shaping up. Now, why are we looking, and we'll look at the silver chart alone in just a moment, but why are we comparing silver to the rest of the commodity complex? Just take a look at these two charts. I mean, we are looking since 1970 in the freely traded era, silver on top and a basket of commodities on the bottom, the CRB commodity complex on the bottom. And just look at how these two charts match up quite interestingly, quite closely in a whole lot of ways. So anyone who's telling you that you should not pay attention to other markets, that they're irrelevant to you as a silver investor, you really need to question that. Now, what are we talking about here with the CRB index? We're talking about, as I said, 19 commodities, and it's broken down in the following ways. So this is an average. We're looking at a 39% weighting to the energy complex. Oil, natural gas are the heavy ones there. Agriculture, okay, 34%. Wheat, corn, cotton, soy, etc. The metals are only 20% of this index, and of those we're talking about precious metals and industrial metals. And then livestock making up 7% of the index. But just look at some of the correlations here, how strongly these two markets are correlated. Look at the rise in silver. Now, it looks small because we're using a linear scale here, but this rise in silver was from under $2 an ounce to $6 an ounce in about a year and a half. You're talking a 200% gain. That would be like silver moving from 15 to 45 in a year and a half. Look at how the commodity complex surged. And so a significant portion of that 200% gain in silver being related to the overall commodity complex. Very clear to see. Look at the peaks. 1980, the peak in silver at $50 an ounce. The rest of the commodities peaking a little less than a year later. Okay. Look at the 20 some odd year consolidation, this grinding, declining, and then rounding out consolidation here below $10 an ounce. And look at how the rest of the commodities just floundered in a downward sort of grind as well. Look at the advance in silver from $6 up to 20. Look at how this corresponded with the rise in all commodities here up through the peak. Notice how both crashed at the same time. So if you're looking to avoid losses, following the commodity sector is also very important. Finally, look at the bear markets in both since 2011. Now, a few differences, of course, and notice how the silver market made a subsequent peak from 2009 to 2011, whereas the broad commodity sector did not match. It did not match its 2008 peak here in 2011. So there certainly are differences. I'm not trying to say these two markets are exactly the same, but we should see very clearly that they are highly, highly correlated. So let us take a look at the silver pattern. First, let's look at the past for a second. We'll see what shaped up at the 2015 bottom. And then let's look at how the current bottoming attempt is shaping up. This is for a reminder. So we're looking at silver in the later stages of the bear market that bottomed here in December 2015. And this was the pattern that was shaping up at the time, what we're showing here in blue. Now, people were getting very, very, very negative on silver into the final part of this decline in 2015. I started publishing research here in August of 2015. That's when the channel started. You can see that. And our premium service was launched right here in February of 2016. Now, why was I publishing research here at the bottoms in this region, and not over here and not back here before this chart even started when silver was in the 20s or the 30s, in the $30 per range? That is because the pattern that we were looking at here. Now, this channel is the intersection of precious metals, pattern analysis, which I love, absolutely studying these patterns. And thirdly, I would say the intersection of wanting to thrive as human beings. And there's this relationship between all three of those: precious metals, pattern analysis, and other aspects of our lives that we can thrive in. But when we're talking about silver here, just to bring it back, this pattern, what was this that got me interested in silver here in late 2015? It was this. It's called a terminal wedge. And this is the pattern. It's hard for a lot of people to believe these when they're forming at the time, because they form at the bottom of a bear market. And what we see is a pattern where the highs are coming down. We can see that clearly. The highs lower and lower and lower. So people are selling at lower and lower levels. And the lows are coming down too. But notice the slope of the lows is not as steep as the slope of the highs. So relatively speaking, what this is showing us, relatively speaking, it's showing us that buyers are stepping in relatively higher on a slope comparison than the sellers. And as hard as it is to believe while it's forming, how bearish were people here on silver, aside from some of the diehard stackers that just, are going to buy no matter what the price is. But talking about people that were hoping to make a return in several years, so bearish right here. But we had this pattern forming, and I was saying this is why I'm getting interested in this market. Now let's just fast forward it. What happened after that is we had that break of the wedge. You can see that very clearly right here, and the advance up to 21.25 over the next 6 months. So you had 4 years of pain. Here's the final 3 years of it, and then a 6-month shot higher. So this is the power of studying these patterns. They can really help you to align with probabilities, and especially remember a lot of the silver miners rose 300, 500% in this move. So if you can catch a few of those once every couple of years, you're going to be doing all right. Now, let's compare that to the present pattern. Where are we? We're looking from that last bottom. Here was the rise up to 21.25. And we're in this kind of grind, this decline here. What is this pattern that we are seeing at the present moment? Is it the same? Is this the same type of bottom, for example, that was setting up here? Let's take a look at it. We'll bring up the color key because we're going to be looking at a lot of different colors. Everything here has a meaning. So for example, look at this the initial decline, and we're always going with a best fit analysis. So you can see these highs here coming from the peak in silver at 21.25. You can see these highs were coming down and down. Not every one matches exactly up, but there's a clear trend of lower and lower peaks, right? And we should usually place a bias with the last peak. So that's how this system works. I've been evaluating a lot of ways to formulate trend lines over the last decade and a half of doing this type of analysis. And I'll tell you, the last peak tends to be the most important, the most significant. For then what happened, we had the break of this downtrend. And notice how silver then came back and retested 1, 2, 3 times. It retested this downtrend 3 times, but it failed to ever close significantly below this trend, basically ever again. So there's nothing random about this here. What I will say, though, is this is the weakest. You know, when we see a trend break like this, the turquoise color, this is the weakest that a market can be and still reflect the breaking of a former trend. Okay, so silver was giving us a hint in these multiple tests of a broken downtrend that it was acting fairly weak, all things considered. Now, we had a consolidation for a year and a half above what? Black, refer to black here, please. Black, a very important horizontal support level between 1560 and 1610. How many hits were there on this level? 1, 2, 3, 4, a brief 36-hour dip below. 5, 6, 7, 8, 9, 10, 11, and the 12th hit. What happened here? The market failed the 12th time that it tested this support zone in black. And so we have a final pattern here when we're looking over the short run. Now, we've been updating the long-term trends as well in the premium subscription, but looking here at the short term, we also have a primary downtrend. Now, the problem that I see with the way that some analysts are evaluating this market is that they will draw, for example, a trend line from this peak and then connecting a peak like this. You can't really do that. I mean, you can, but it's just not going to give you an accurate sense of what is actually happening in this market. So when we have a broken trend like this, the next trend has to start from the peak following the broken trend. You cannot just connect peaks from a former trend with a present trend. It just won't work. You're not going to get an accurate sense of what this market is really doing. So let's look at this. So we have this downtrend also coming in. Now, here was the breakdown. Okay, we talked about that. And what was this pattern that was setting up in silver over this entire last 18-month period? It was not a bottoming wedge, not a terminal wedge, as we saw at this bottom. It was a descending triangle. Flat support, declining resistance is a descending triangle. It's a different pattern. And unfortunately, this is a bearish pattern, whereas the other pattern, a terminal wedge, is a bullish pattern. This is something that you'll learn if you study these patterns, the difference between different types of triangles. So we saw the breakdown here with silver, and where are we right now? Retesting the breakdown point in this range here below 1610. So the highest probability assessment here, what I am aligning my investment thesis with over the short run, is that the combination of the descending sellers along with a broken resistance that is now acting as resistance right here will cause this market in the present zone to back off once again. And the market should make a new lower low below this bottom into the first part of 2019. This is the highest probability assessment. This is how I am aligning myself personally. I am waiting for the bottom to form. We do have an exact target for that based on the amplitude of this, but I'll be evaluating a host of signals as we get closer in to this low for silver. Now, any good analyst always looks to identify what would be a point where the market is showing me that the predominant pattern here has changed. What would be that point? It would be if the pattern in question, the primary pattern, this blue color, the descending triangle, if that pattern were to be broken, it would show us that something new has developed in silver. This can always happen. It can happen in any market at any point. but the bias must be with the valid pattern. This pattern is still valid, and it is a descending triangle that should result in a new low for silver in the first half of this year. Thank you very much for watching. As I said, in Vancouver this weekend, we're going to kind of bring all this together. And I gave you a little tease of what we are going to be talking about in Vancouver when we looked at that commodity, the relationship, right, between silver and the commodity complex. We can see how important that is. And we have a lower target for silver. What is the pattern that is shaping up in the commodity complex that is going to exert a lot of influence on silver here over the next 1 to 2 years? There is a very powerful pattern that is forming in that average of all 19 commodities that I have identified that I'm going to be revealing this weekend in Vancouver. And we are going to look at how this will impact all commodity investors, including silver investors. So I think there will be a video broadcast for that, by the way, that will be going up. I don't know what the link for that will be yet, but I will post it most likely next week as soon as I have that link to the broadcast in case you can't attend in person. We're going to be looking at this in more depth in Vancouver coming up, the relationship here and what is setting up in the commodity sector. I do thank you for watching. It's an exciting time. I predict the next 5 to 10 years is going to be an incredible time to be tuning into the commodity space. It's really overlooked. I don't think there's a skyrocket type of move coming, but it is going to be a very good time to be picking and choosing when to invest in these markets. So that is what I attempt to provide here, is just an unbiased look as best as I can of the patterns. I love studying these patterns. I hope that you do too, because when you can align with them, you can really set yourself up in a high probability kind of way for these markets. It can really result in some nice gains if you time a few of these markets properly. Make sure to subscribe to this channel. This is iGold Advisor, and we're expanding into iGlobal Analytics, which is going to create a platform for covering other of these things like the CRB commodity sector. Make sure to subscribe. There are 2 services that are now being offered. One is precious metals intelligence. So if you liked these looks at silver, for example, and you want to look at the long term, you want to have this type of analysis on gold, on the gold and silver mining sector, on every single company that we are investing in here and why, that service is available for you. That is called Precious Metals Intelligence. The new service that is coming soon, and I say soon, it's almost ready. We've had a few technological hurdles to overcome here with the website and whatnot, but that is coming very, very soon. There is a link below if you want to be notified. I mentioned that last week, and I have your email address if you signed up. But if you want to be notified, we're going to be covering oil, natural gas, platinum, palladium. I think there is a huge trade opportunity in platinum coming up this year. We'll be covering that, gold, silver, copper, stocks, bonds, and currencies, all in that service. So if you want to know when that is launched, that is going to be a premium service for investors and traders in these broad commodities who like to have an understanding of these patterns that are shaping up. Last but not least, I want to thank everyone watching these videos, those who are supporting the free videos on Patreon. I absolutely appreciate your help with that. And even if you're just tuning in and just watching the videos for free, there's absolutely nothing wrong with that. And I really appreciate you tuning in. You know, I couldn't have gotten to this place without your support. So I want to say from the bottom of my heart, and you know, as I'm speaking this Sunday in Vancouver, so much of my thanks goes to you for watching these videos over these last 3 or so years. Without you, I would not be at this point. So I will continue to provide these videos. We will keep taking a look at gold, silver, as well as some other markets of interest once a week here on YouTube. And know you can find out about the premium services on the links below. Thank you, and I will see you this time next week.